Good evening, traders. This is the market analysis for 29th August 2022. If we are looking at things from a global perspective on a weekend, because there is an event that's being held, in all likelihood, we can expect a gap down opening for tomorrow. But since we are not news based traders and would rather go with technical analysis here, if we have a look at the Nifty and the Bank Nifty indices from a volume profile and order flow perspective, we can see that on Thursday we made a P-shaped profile, but a close at lows, which, as I said before, indicates weak distribution. And the intent of these sellers is known when there is a retest of it, which we actually saw on Friday happening. It was quite a volatile session on Friday, but since there wasn't any clear moves on either sides, uh, for now we cannot say that these sellers have actually shown these sellers in the upper range of the Thursday's market movement have actually shown any intent to defend their shorts. To the downside, the reference of 17,550 to 17,610 is very important, and if at all we follow the global trend and we open with a gap down tomorrow, then if we open below this particular area 17,550, 17,610, the next level which is on the cards is 17,290 to 17,320. There is a high chance that the recent swing lows from where initiative buying had started can get broken. There is a very good probability that this buying area can get broken. Moving on to Bank Nifty. Bank Nifty is indicating a similar trend, but the metrics are slightly different in case of Bank Nifty. The profile was not a classic P shape, that distribution profile in case of Bank Nifty on Thursday, but it was more of a profile which indicated exhaustion at upper levels. The highs of last week highs in Bank Nifty is very important for longs, because only above it we can see fresh longs coming in and momentum coming in. Longs would need to take prices above the highs of last week. Until we are below it, there is a good chance we can test 38,630, which is my initial reference, and then the absorption lows which I was sharing last week about, where higher time frame buyers are present. Their reference of 38,200 to 38,370, the lows from where we started actually showing initiative and moving up, there is a good probability we can test this area if we break 38,630 to the downside. Now, it is expected to be a volatile session tomorrow, and markets are expected to swing wildly on either sides. And yes, even if we have a large downside opening, whenever there is a large downside or an upside, a gap up or a gap down opening, the scope on those trading sessions for intraday traders becomes very less, because the play is happening on a much higher time frame, much larger time range. The play is unfolding. So as a day trader, you wouldn't have much trading opportunities. So especially in times like that, when volatility spikes up, we see an extreme opening on the upside or on the downside, I usually recommend traders to, one, cut down their position sizing, and two, wait for at least the opening 30 minutes, 15 to 30 minutes to pass before you pick a trade on either sides. Let's leave the opening scalps to the experts, and focus on picking efficient trades on high volatile days after the first 30 minutes. In no case you have to avoid such days, because every now and then you have an event which would cause market volatility. Sometimes unexpected things happen and uh, result in a spike in market volatility, like for example the Russia Ukraine war. So these are all not the kind of things that you can avoid as a trader. Don't be afraid of volatility, learn to harness it, learn to understand it and survive in volatility, because volatile periods are the best periods for traders to actually thrive. But take it one step at a time. I hope this video was useful, folks. If yes, please make sure to like and subscribe to the channel, and also join my Telegram channel where I share live market updates. The link is given in the description below. If you have any questions, do let me know. See you all tomorrow.